This is a tutorial on the new residential listing agreement revised July 2024 for the post-NAR settlement era, car form RLA. And I already did a tutorial on this, but I'm redoing it. This is an updated version due to all sorts of changing factors as we approach the post-NAR settlement world. So this form is bundled with others. When you export it, you'll see it's 19 pages, but don't fear, we'll go through it very quickly, yet thoroughly. And I'll start at the top here, which is the disclosure regarding real estate agency relationship, which you've seen before, same old form. You put your client's information, your information, you both sign. It's 2 pages. And here we are at the actual listing agreement. Now, please note, this is in a new format. They changed the listing agreement from this, which is a bunch of text, to this, which I call a chart or grid format, which is similar to what they did with the purchase agreement a couple of years ago. It's actually quite helpful because this summarizes key terms and then it pushes all that boring text toward the back. There it is. And you can find corresponding information for each key term. So we'll look here in this column, paragraph 4B, 4C, 4F, 5A. So you can look up, if you want more information about any of these items, you can go down and find the corresponding paragraph. Let's go down to 4C. And there's more information about what we are doing up here in this summary section. So just think, it's this grid or chart format up front to make it easier to view and find key terms and corresponding information toward the back. We put the date we prepare the form here, the name of our client or clients, the name of our brokerage, property address in the city and county, and the zip code and the parcel's number, the unique identifier issued by the county, which can be found on the MLS or through Realist or some sort of tax data provider or a property tax bill or from the seller, or if you really can't find it, just leave it blank and try to find it and come back to it later. Listing period, very important that we put both a starting and ending or beginning and ending date, because if one or both of these dates is missing, this form becomes unenforceable and likely void. So make sure you have both a beginning and ending date. And I still see listing agreements that get done or leave this out occasionally. So it's very bad. Very important to make sure you have both dates. Not to exceed 24 months. That's a rule, a law, that this period can't be longer than 24 months. Listing price, you'll put in a dollar amount and it'll automatically calculate a text version of it here. If you have a manufactured home or this is probate, just check the appropriate box. Then we come down to the compensation section with this disclaimer. You'll see this everywhere on forms now as part of the settlement, that commission is negotiable. Surprise, as if it hasn't always been. Then we come down to C1, compensation to seller's broker. To drive the point home, it says only seller's side of the transaction. Now remember, in the old listing agreement, we would check this box here. We'd write in 5%. Then we'd scroll down here and check this box and we'd put in 2.5% that we're sharing of our 5% that we're collecting to the buyer's broker. So listing broker up here charges gross amount and shares some of that with a buyer's broker. Well, there's no more cooperation. In the post-NAR settlement world, there's no more cooperating broker compensation. Every broker is out for themselves. So we have compensation to only the seller's broker, only seller side. We put that here. And then I put $500. This I'll apply toward my broker fee or maybe a TC to pay my TC because it's this and this. You don't have to put something there. I'm just showing you. You can check this box and put a flat fee dollar amount if you want. Or you can check this box and write and create a compensation schedule. If you do, make sure that it's not ambiguous. It must be definitive, and one must be able to objectively determine what you're charging. It can't be some sort of sliding scale thing. Okay, down here, we have this other provision, which is a double-edged sword, and I'll explain why. Additional compensation to seller's broker if the buyer is unrepresented. Well, we check this box, which I recommend. I recommend checking this box and then putting an amount, because an unrepresented buyer is almost certainly going to be a hassle and needy and lost throughout the transaction, which means more work and more headache for you, the listing agent. So, should you be compensated to put up with that additional hassle? The answer is yes. So you put an amount here. Now, this does create a problem. And quite frankly, if I were asked, I would have not put this in the listing agreement, because this inadvertently incentivizes listing agents to offer assistance to unrepresented buyers, so listing agents can pocket more money. The buyer is not getting proper representation, and it gives a buyer leverage to tell buyer's agents no when a buyer's agent asks for a representation agreement to get signed. Because representation agreements are required starting August 17th. They require a buyer to pay a commission. A buyer, if they refuse, they have to self-represent or go unrepresented. Most buyers, the vast majority, are helpless. These listing agents are getting incentivized to offer help and have no representative on the buyer's purchase agreement. So they're not officially a dual agent, but they're effectively assisting the buyer as if they were a dual agent and getting paid for it. So this is bad for that reason. That said, I think a listing agent should still be compensated if they have to deal with that hassle. And I will make a separate video addressing this topic further. Okay, continuation of right to compensation for broker. And that's identified prospective buyers during the listing period. Because what happens if your listing agreement expires and the next day the buyer that viewed your listing last week decides to write an offer? You should get paid because this all began during your listing period. So you have that protection for how many days after the end of the listing period, whether it's expiration or whatever? Well, I put 30, which is the least amount of reasonable time in my opinion. But don't stop there. Put 60 or put 90 or put whatever you want. Longer the better. But this protects you so that if someone that came during the listing period comes back to purchase after it expires, you're protected. Make sure that you keep track of the buyers and give that list to your seller upon expiration. Very important. Seller obligation to pay previous broker. Maybe your client just got out of a listing agreement with another broker and has some sort of continuation obligation with that broker or some sort of obligation. You'll put that here. It's rare, but it's here if you need it. And that's it for compensation. That's all there is now. Very different than how it was here where the listing broker collected and shared. No more collecting and sharing now. You're just worried about the seller's side. That's it. Buyers on their own. I'll explain a little bit more in a little bit. There's the included and excluded items. And that's similar to what we had here in the old listing agreement. What items are to be included? Well, these are items that probably wouldn't already be included in the sale of a real property affixed to the ground, immovable. And you're including items that wouldn't typically convey, like your garden gnome. So you check the box and you write garden gnome in backyard. Or excluded items. That chandelier that you love, that rare one-of-a-kind heirloom that's hanging over the dining room table, that is going to convey by default because that's affixed to the real property. But you don't want it to convey. You're going to take it to your new home because it's an heirloom. So check this box and write dining room chandelier. These are exceptions. You can be as thorough as you want here. Most agents leave this blank, but I'm just telling you that's how it works. Leased items, if these pertain to your listing, put them there. Same with liened items, like if there's a lien on the title because the owner had solar added. And if there are smart features, put them in, pretty obvious. Will the property be on the MLS? Very likely, yes. Write in your primary MLS. I wrote in CRMLS because that's my primary, even though I'm a member of multiple. That's going to incorporate this form, MLSA, which we will get to because it's part of this bundle and it's actually very important. if this applies to you, just read this line, check the box if it applies to you. Of course, your client's going to initial every page. By default, offers will be presented as soon as they're received. If that's not what you're going to do, check the appropriate box. And then so they call these love letters in other states, and some states have banned it. But you know how buyers will put a picture of, it looks like the artwork you see when you buy a frame, some professional photos, so that you think, oh, they look like such nice people. Let me, something to warm your heart, basically, right? That's what it is, to kind of humanize just a blank document. Well, by default, it says don't present those letters. Well, come on. What fun is that? So if you want, check the box if you want to present those buyer letters of why they want the home so badly. Okay? I mean, what if all of their family lives on that same block and the buyer wants to tell you? Anyway, that's entirely up to you. Here's another problem with this form. By default, natural hazard disclosure is checked. It shouldn't be. Why? Because this is negotiated in the purchase agreement. In the purchase agreement, you have to negotiate who's paying for it. Yes, I know the seller pays for it almost all the time, but from which company? The seller is purchasing it from which company? The buyer's going to write in the name of the company. Why would the seller buy it if they don't even know which company to buy it from yet? Anyway, this shouldn't be checked, but I don't make the rules. I'm just showing you what's here. If you have these reports, go ahead and check the box, but I wouldn't even pay attention to this, quite frankly, because all this will be addressed later. There's really no consideration of simplicity with these forms now. It's just layer after layer after layer after layer until we have a huge tower of paperwork at the end of every transaction. All right. And if seller needs to buy a replacement property and wants to make a contingent, check here. Now, okay, so additional terms, leave this blank. Do not put this here, okay? I will show you why I put this here in the past, but do not put anything in additional terms until later. Ignore what I put here. I'll explain in a second, okay? But for now, just leave it blank. We're going to scroll through here because this is just corresponding text. This is more explanation of what we've already covered up above. So we're scrolling through it because we've already gone through this. This just gives you more details if needed, and you're welcome to read as much as you want. Look, we're going through page after page 5 of 7. Mediation, that's good, so you avoid court if things go wrong. Okay, and this is 6 of 7. We're scrolling through, and we're here at the bottom. All right, we're here at the bottom, and this is where, so if you have an entity, of course, check this box, entity being a trust or an LLC or corporation. Who's the authorized signer? You'll put the person's name. And then, of course, everyone's going to sign here. You know how to do this, right? Here is something that is new, multiple listing service addendum. This just goes on and on explaining the point of an MLS, but there's a very important section in here. This is just boilerplate advisory stuff. So we're going through. I should mention as we're scrolling through. So if you remember clear cooperation, basically when you take a listing, it has to go into the MLS immediately. Pocket listings have been effectively banned by NAR and all the corresponding realtor entities. So what happens if you want to take a listing, but the property is not ready for 2 weeks because it needs to be professionally cleaned or there's some other delay? Okay, well, you can check this box here and to put that the property won't be marketed to the public on this date. And then it still is supposed to go in under coming soon. Now, sometimes people think that you can just do an exemption. There's really no exemption anymore because if you check this box here, and this is a very rare situation, and you do a SELM, so people will use a SELM form and think that that just means they can have a listing, market a listing, and the SELM gets them out of the MLS requirement. Well, it doesn't, I'm sorry. But the SELM now is if the property is going to not do any public marketing. Look, they even say seller instructs broker to not market property to the public. And then they say use a SELM. Are you going to take a listing and do zero marketing? That's in a very, very rare scenario. Odds are no. So I'm just mentioning here that when I see these SELM forms done, usually it's done incorrectly, because this is a unique situation when someone's contracted for basically an off-market transaction, or they're just exploring a transaction and the buyer was already identified at the time of this. So if you have a question about that, just leave a comment. All right, we're scrolling through this. Just scroll through. Just the exact same thing that I'm doing here, you can do when you fill this out. Now, this is where it's important. Seller authorization, 5B. Now, this is another boo-boo with this form. By default, it says seller doesn't authorize to put in the MLS that the seller's willing to offer concessions. Well, here's the thing. In this new post-NAR settlement world, we have this field. Seller will consider concessions an offer, yes or no. This is a conversation you must have with your client, because when you're entering it in the MLS, you have to be able to answer that. Is the seller willing to offer concessions? When you take a listing, you should already be talking about this, or else your seller is going to be asking you, why does every offer have an SPBB form? Why does every offer ask me for concessions? Don't let it be a surprise. Tell your seller that buyers are going to be asking for concessions. Well, you're filling this out with respect to the MLS. The MLS is asking if the seller is willing to offer concessions. You need to ask this question, because by default it says no. So if you don't do anything here in 5B of this MLSA form, then you have to put no here. What if the seller is actually offering concessions? Now you've misrepresented the seller's position. You have to go here, have a conversation with your seller, and check this box saying that, yes, you will put concessions. You will offer concessions. That's it. That's what I'm saying. By default, it says no. And so you have to go in and modify that. I won't continue on about that, but I just want to bring that to your attention, because it's very important. Because if you're filling this out in the MLS, you must go through here and elect to do it. See, what I don't like about this is that it automatically says no. It should leave it open-ended and leave this as a conversation. But if you do nothing, it says no, which means you have to put no. Okay. And then the seller's going to sign, you're going to sign, we move on, seller's advisory. Now, there are going to be advisories that just go on and on and on, and you don't have to do anything. Broker compensation advisory, fully negotiable, blah, 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 fully negotiable, in writing, blah, blah, blah. That's it. Both parties sign, we move on. Same thing here. I mean, these are just to mitigate legal liability, so that if something goes wrong, you can say, no, Mr. Client, I informed you. Didn't you read paragraph 11 of page 18 of 19? You didn't read that? Well, shame on you. That's what all this is for. It's CYA, as they say in the legal world, I think. All right. That's it. That's the listing agreement. If you have any questions, please leave a comment. I guess I'll end one last note. This form, one of the reasons I updated is because the MLS used to ask how much concession amounts were. I'm going to it right here. In additional terms, if your seller agreed to offer a certain amount of concessions, you could put that in here. That's where it would go. So if in the MLSA, the seller says, yes, I want to offer concessions, and you know what? I'm offering 2%. That's it. So take that 2%. Well, you can write it in here. And you could even write it in the private remarks on the MLS. But now I don't recommend doing that by default. Leave this blank unless your seller explicitly tells you they have a certain percentage. That's when I'd put it here. If not, leave additional terms blank. And that is a conclusion on the new listing agreement. Thank you for watching.